Hello and welcome to another video of not financial advice, just my personal opinion with me, Christian Rauchenwald. Now in today's video, I want to briefly introduce you to Elliott Waves and how you can use them to predict what the market or a specific asset is going to do in the near future, where they can be used for you to find the right entry spot and also your take profit targets for your positions. And in addition to that, I'm also going to show you how you can apply them or how I apply them to the positions that I'm currently holding and why currently only 50% of our available funds are actually invested in stocks and the other 50% are in cash. Now, Elliott Waves are something that's not very widespread, although it's, in my opinion, one of the things that every investor or even trader should study and learn to apply. I don't know why it's not that widespread, but in my experience, it's highly accurate. Now, the core principle behind Elliott Waves is that the market always moves in certain patterns, so-called waves. We have impulse waves that go into the market direction. So if the asset or the price of an asset is moving upwards, the impulse waves go also in that direction. And we have corrective waves that go against the trend. Besides that, impulse waves always consist of 5 different waves and corrective waves usually of 3 different waves. And within each wave, we are able, either on the same time scale or on lower time scale, to find separate waves. Again, there are a few other rules to how Elliott Waves work, but I don't want to go too much into detail here. If you're interested in learning Elliott Waves, you can either order this book online. You can find a link to it in the description down below. It's $29 with free shipping worldwide. Or if you don't want to spend $29 on a book or you don't like to read hardcovers, you can also use a link in the description down below to simply read the book for free online. On top of that, if you take a look in the description, you'll also find a link to this handy cheat sheet, which basically contains all the basic wave patterns and makes it easier for you to spot waves on the charts. And additionally, you'll also find a link to the online software that I'm using that pretty much automatically tries to detect waves for you. Now with that, let's take a look at 1 or 2 examples of how Elliott Waves work. And I'm going to share my screen with you where you can see that I've opened up the Tesla monthly chart since roughly 2010. And in wave basis, I don't have to do it manually. I can just click this magic button here and it will from this point forward try to match the Elliott wave patterns for me. And as we can see, it found the pattern, although there's no 100% guarantee that the patterns are accurate or final. Just like if you think about if you use a moving average as your indicator for when to enter a trade, or you use a combination of 2 moving averages and when they cross over you enter your position or you close your position, your moving average indicators would always be lacking behind because it takes time for the average to adjust. So you might miss out on great opportunities, or you might end up entering positions or leaving positions too late and causing yourself some losses. And the same applies to most other indicators. Now, Elliott Waves, in my experience, are not as bad as if you use other indicators, but are actually far ahead. However, depending on what time frame and what segment of the chart you look at, the pattern that you'll find on the chart may not be 100% clear. There may be the possibility that another pattern would also fit all the criteria, and only once we have a few more candlesticks will it become clear which of the patterns is actually accurate. Now back to Tesla here. As we can see, it detected a 5-wave pattern here. You can see 0, 1, 2, and so on up till here, which is the impulse wave, and followed by a corrective wave A, B, C, which then is followed by the next 5-wave impulse that we can see here. Now, if I'm going to scale that a little bit so we can see the top, we can also see that it currently would say that our wave 5 ends here, which means for Tesla we would now expect an ABC corrective pattern. However, it's possible that this candle here keeps growing further, or that the next candles will go up further, and that our 5 actually grows with it. So because unless we have the pattern confirmed for the ABC correction, we cannot say for sure that our wave 5 already ends there. It doesn't mean that you should buy Tesla right now. It's one of the reasons why I personally did not buy it right now and I'm actually waiting for a correction. It just means that The pattern fits till here, but the 5 would also fit if the price goes up till here. However, what it definitely means is that either at this price level right now we will see an ABC correction, or the price will rally further and then we will see the ABC correction. Now, another thing that you might notice and that might even confuse you is that when we look at our starting point, we have 3 different waves that start here with 0. And as mentioned initially, each wave basically contains other wave. And if you look at the Elliott Wave book on page number 27, you can see the list of those waves, or the list of those different gradations, however you want to call it. There is a total of 15 levels. So if you look at an asset like we are doing right now on Tesla and you're able to find the biggest wave, so we assume this here would be wave number 1 from down here to our current high, you would need to be able to fit in other waves in there. And if you use the PDF cheat sheet that you can get again in the description down below, you will see the requirements. And it will tell you that, for example, within wave number 1, you should always be able to find another impulse wave, so another 1, 2, 3, 4, 5, or a leading diagonal. Now, I'm not covering leading diagonals here. They are mentioned on the cheat sheet and they are also explained in the Elliott Wave book, which again, you can either order or read for free online using the links in the description down below. But I just wanted to point it out. So we also notice when we look here that for the wave number 1 in pink or violet, whatever it is, that it has a question mark to it. It's not sure yet if that actually is wave number 1, but it also provides us an assumption for a price target or a range for wave number 2. So assuming that the other wave patterns on this chart are correct and that the price will not go up further, which would move our 5 and C further up, we would actually be able to assume that Tesla will correct down to roughly 440 or 301, so somewhere in that range, and we would be able to enter our pending buy orders in that range. Because after wave number 2, so wave number 1 is an impulse, it goes in the trend direction, which is in this case up. Wave number 2 would be a corrective pattern, so for example ABC or any of the other available corrective patterns, which are also mentioned on the cheat sheet that you can find in the description. And then wave number 3 would follow, which is actually quite interesting because wave number 3 can never be the shortest wave in terms of the height, so the price difference that the wave achieves. Which means, assuming that this wave number 1 is correct and we don't see a further climb here, which would just move that point further up, we are going to see a correction within Tesla that will reduce the price down to somewhere in that range. Obviously, if the price now keeps climbing, because again, it could be that that's not the end of wave number 1 and that's not the end of wave number 5, then it would also move that range further up. But the point is that eventually we are going to see that correction into that area. It potentially could also fall further, but usually time has shown, or in my experience, that range or the range that is predicted is usually very, very accurate. And from there it would start wave number 3, which among the 5 waves, so if you have wave number 1 goes up, wave number 2 goes down, wave number 3 goes up again, wave number 4 is a corrective pattern again, so it goes down, and wave number 5 goes up again. So among those 5 waves, waves number 3 can never be the shortest. So if wave number 3 is not covering the same ground as wave number 1, it means that wave number 5 would also be shorter in the end, because wave number 3 can never be the shortest. Now that you know some of the basics around Elliott Waves, let's take a look at the positions that we're currently holding in my portfolio. And if you're not yet copying my portfolio, or if you want to check it out, you can also do so by using one of the links in the description down below. As you can see here in my popular investors portfolio, I'm currently holding 50% of the balance in cash, and that's mostly because in pretty much every major stock that I would be willing to invest right now, we are at the end of wave number 5 according to my Elliott Wave analysis. So buying right now would mean it could go up further a little bit, but eventually we're going to see a correction. And considering the rally that we had since March 2020, I'm actually expecting a correction to happen soon. And I rather not be invested at that time, but use that correction to then invest the 50% that we still have available in cash. Now, out of the 50% of funds that we have invested, we have roughly 10% in Bed Bath & Beyond. And if we look in wave basis, so Bed Bath & Beyond, and open it up here, and we're going to switch from the monthly chart that I used to show you roughly how Elliott Waves work to the daily chart. And what we need to do here is to find the end of a big correction, because that's usually the end of a wave, which means from this point on we can draw a new wave pattern. So in this case, that was the correction in March, and we again just gonna press the magic button. There are a few other things that I could do to manually detect them, but I'm so spoiled by wave bases by now that I usually then just double check the things that they plot on the chart. And we can find our wave pattern here. I'm gonna scale it a little bit so we see all the waves. And we see the bigger wave here is 1, 2, wave number 3. And that's also why I bought Bed Bath & Beyond, because you see the correction predicted after wave number 3 was supposed to go to roughly $31, although overall it fell further. And as we can see, wave number 4 is not fully confirmed. It still has the question mark here. So the price for this stock could even drop further, at which point we probably would average down. So I would increase our position slightly. We can also look at the subwaves. And here we see that we have a 1, 2, 3, 4, 5 pattern that's not confirmed. The 2 is not accurate right now, which we can also project forward. So which is expected to go like this. So based on Elliott waves, it's likely that from here on out, our wave number 4 actually ends and we are going to see our wave number 5. Now I will need to scale the chart further so we actually see the prediction for wave number 5. And you can see that the price target for wave number 5 here would be somewhere in the range of $80 to $90 per share. And that's the reason why we invested in this stock. So unless the overall pattern changes for some unforeseen reason, I'm not going to sell that stock, even if it would drop a little further, because as we can see here, the pattern is quite clear. We have our 5 waves, and from here on out, it actually is supposed to go up into that range. There are also shorter wave 5, so it could end somewhere here, but considering the average price we bought at, it would still be a decent profit for us, so it's still fine for me. And I'm still gonna hold on to those shares until we get there. What also adds to the confidence that I have here is that we can see within the bigger wave that we're looking at here, the subwaves also work out perfectly and fulfill the conditions laid out by the Elliott wave theory, therefore making it more likely that what's projected here is actually going to happen. And just in case you missed it initially, this is the point where I'll also remind you again that what I'm showing you in this video is not financial advice, it's just my personal opinion, and you should do your own due diligence. Now, you should decide for yourself if you want to invest in the company, if it's a solid investment. For me personally, based on Elliott waves and based on the fact that the company was able to recover its stock price after COVID like many other businesses did, is sign enough to have a small position in the stock, and the potential profit target, which we may see within the next couple of months, makes it worth it. Even if it takes a year until we get into that range again, we're looking at around 100% or more return here on our position. That's it for today. I hope you got an idea of why I'm holding certain stocks. If you have questions about it, if you disagree with what I'm saying, if you think I'm totally insane, let me know in the comments down below or on the newsfeed on eToro. If you want to know more about Elliott Waves, as mentioned, go and grab a copy of the book, or if you don't want to spend the money, read it for free online. And also feel free again to download the cheat sheet that you can also find in the description down below that basically helps you with identifying wave patterns. I promise I will share a little bit more in future videos about how I'm personally confirming certain wave patterns and how I find the right entry and exit spot and so on. That might help you in your personal portfolio management in the future as well. Thanks for watching. See you in one of my other videos. Till then, bye-bye.